Parting gift to TCS shareholders, and this is what we had reported first. Chandra was on the channel before the announcement breaking up TCS's shareholder return plans, and it's now official. TCS has decided to dip into its massive cash pile and reward its shareholders. The company has announced a mega 16,000 crore rupee share buyback. The TCS stock rallied nearly 4% in trade. Look at that, it closed up in the green right after the announcement. In fact, the stock has been rallying ever since N. Chandrasekharan told CNBC TV 18 that he agrees with the view that TCS must return some cash to investors. Reema Tendulkar is here and she's been tracking this very closely. Reema, take us through the fine print and the details of the buyback.
Well, for one, the TCS buyback doesn't disappoint. It's a mega size of 16,000 crore rupees. These are some of the other details. They will be buying back 5.6 crore shares. That's about 2.8% of the outstanding equity. This will be, the total size is 16,000 crore rupees. It's a tender buyback. So they will buy back all the shares at a price of 2,850, which when you compare it to where the stock is closed even today, offers you significant amount of upside, close to about 11%. Now, with respect to what TCS is left with, they had cash in excess of 43,000 crore rupees. So of that, 16,000 will go towards the buyback, and they will still be left with 27,000 crore rupees. So you can't rule out the company paying you some sort of a dividend. Last year, they shelled out 10,000 crore by way of a dividend. Maybe they'll bring it out, but we do expect that some dividend will be paid by TCS even this year. Now, with respect to, the massive buyback price of 2,850, which is why that stock surged in trade, if you compare it to where the stock actually closed in Friday's trade, that was at levels of 2,400 roughly. It's a 18% premium. And if you compare it to where the stock closed today, you're still making a 11% premium. However, although the buyback price is very high, the acceptance ratio is only at 2.8%, and that is if the promoters participate. Promoters hold 73.3% stake, and we understand that the promoters are likely to participate because if they don't, then their shareholding crosses that 75% mark. So although the price is very high, the acceptance ratio is only at 2.8%, and that could be a bit of a dampener. This will require the shareholder nod. As we've been saying, it's the first buyback by TCS. In a way, it's also a parting gift by one of India's most successful IT CEOs, N. Chandra, as he now takes over the chair of Tata Sons. But I think the focus will shift soon away from TCS and onto the other IT companies like Infosys, where they too are sitting on a massive cash pile. And I think the clamor for return is only going to increase after TCS has, rung the bell. We'll wait for what the other IT companies have to do. Back to you.
Oh, yes.